So I got this question from Tiffany inside of the Debt Free Millennials Facebook group, and she asks, do student loans impact your ability to buy a house? If you still have student loan debt and you're trying to buy a house, how does that all work? We are going to break that down in this video. Hey, what's up guys? It's Justine with Debt Free Millennials, the channel to help you crush your debt and live payment free. If you are new to the channel, we talk about all ways to help you pay off your debt and then continue living debt free. So if you're new here, scroll down to the bottom and hit that red subscribe button. So student loan debt. A lot of us still have it, and we are now entering into that millennial phase of life where we are thinking about buying our very first home. So what happens if you still have that debt and you're trying to make this a goal of home ownership? Just because you have student loan debt doesn't mean that you can't buy a house. You absolutely still can. However, student loan debt does have an impact on your ability to buy that house, and there's really three big reasons that you'll want to pay attention to. The first reason is your student loan debt impacts your debt to income ratio. Now, a lot of banks and lenders use your debt to income ratio in order to consider how much or how big of a mortgage they are willing to lend to you. So the higher that DTI number is and that higher percentage, the less that they are likely to give to you. So a debt to income ratio number is the amount of debt that you have divided by your pre-tax income. And I really think this is an unfair ratio to use because obviously things like taxes and other deductions reduces the amount of your income and therefore actually reduces the amount of money that you can put towards a down payment or a mortgage. So I think it's a little unfair that they use that formula exactly like that based off of your pre-tax income, but that's exactly how it's calculated out. Now, a lot of banks and lenders like to see that your DTI number is around 30% or less in order to give you some favorable mortgage terms. Not to say that if you had a higher DTI that they wouldn't give you a mortgage, you just might not have as favorable terms if your DTI number was lower. The second reason student loans have an impact on your ability to buy a house is that your student loan debt makes it harder for you to save for a down payment. Think about this. You have to make those minimum payments. And let's say that you're really trying to pay that debt off. That means that there's less income available for you to save for a down payment while you're doing that. So the more money that you are putting towards debt, the less amount of money that you are able to put towards a down payment or free up for a mortgage payment. The third reason that your student loan debt has an impact on your ability to buy a house is because your student loan debt impacts your credit score. So if you're making on-time payments with your student loans, that's going to show up in your credit report, and the history of on-time payments makes up a percentage of your credit score, which actually can help improve it. So long as you're making those positive payments on time every single month, you're going to see that improve. And we all know this, right? A better credit score means a better and more favorable mortgage terms and rates so that you can get into the house that you want. Now, a quick note on where we're at today in this world. Federal student loan debt has been deferred and put on administrative forbearance until at least September 30th of 2021, which means if you still have federal student loans, you are not required to make any payments until September 30th. Now, this information does not get reported on your credit history because this is administrative forbearance and it's not going to negatively impact your credit score. So my recommendation is if you still have student loan debt and you're looking to buy a house for the very first time, I would really focus on paying off all of your debt prior to getting into that home. That's because once you become debt-free, you have a lot more resources and income to put towards that down payment. A bigger down payment means a smaller mortgage payment, and that'll make it easier for you to transition into home ownership. Now, if you're like, oh my God, it's going to take me like 10 years to pay off my student loan debt, I can't possibly wait that long, then you can pay down your debt and simultaneously save up for your house at the same time. However, if you are going to go that route, I highly suggest that you still make debt the priority and then make the down payment your second priority. And what I mean by that is more money should be going towards the debt every single month, and then have a lesser amount of money going towards your down payment savings every single month. So you could be putting a $500 student loan payment towards your debt every single month, and then maybe you're saving $200 towards a down payment. That's how I would prioritize it, because the goal is to get you to become debt-free so you can be in a better position to be a responsible homeowner and not be overwhelmed by the expenses and the costs involved. All right, guys, I hope that helps you determine exactly what to do in your situation. I would love to know in the comments below whether or not you are attacking all debt and then moving on to your down payment, or if you are trying to strategize and do both of them simultaneously. Whatever situation works best for you, so long as you're making progress in your financial journey. Comment below, give this video a thumbs up, and I'll catch you in the next one.